Hello and welcome to another edition of The Journey. One of the things that most all of my clients agree on is they don't like to pay taxes. And Will Rogers once said that, the only difference between death and taxes is death doesn't get worse every time Congress meets. And I think, there's some truth in that. And the uncertainty of not knowing what taxes look like in the future is sometimes unsettling, specifically when people are talking about Social Security reform and Medicare reform and all of the obligations that our government has. The one thing we do know is what taxes look like today. And one of the things that we've been trying to work with our clients on is doing a little more tax planning before the end of the year so that we can make adjustments as necessary and effectively, hopefully, lowering your lifetime tax bill. One of the tools that we've been using over the last couple of years is Plan, a tax planning software where we can kind of edit some things and make it look like what we want it to look like. So if you've received a contact from us recently looking for last year's taxes, it's really so that we can help you evaluate and do some planning along the way. One of the things that we've found with our clients is a lot of times they do reactive planning. We just kind of work and make our wages and pay the taxes that come out of our check. And at the end of the year, we either owe money or we don't. And then, the next year kind of just rolls around again. So, trying to do a little bit more proactive things this time of year is something that we're advocating for. And really, accountants and tax preparers in tax season don't have a ton of time to do that planning. But in the off season, they're a little bit more open to having time to do that. So I just wanted to take some time to show you the software that we're using, to show you a couple different scenarios, just samples that might pertain to you or probably don't, but just some things that we can do with that software. So in this example here, I'm talking about Jill and Joe sample, and we have uploaded their 2023 taxes so that we can kind of manipulate and look at a 2024 hypothetical if they retire and a 2024 hypothetical if they continue to work. In this case, last year they made some wages of $150,000. They do have a pension that they're collecting on, but they have not elected Social Security. So you can kind of see if they retire, obviously their wages go away. We do have some taxable interest in there because CD rates have gone up. They still have the pension, and we can show Social Security being elected here. In their hypothetical, if they continue to work, we just kept their wages the same as 2023, and really not much else has changed. So one of the things, and I'm going to show you their total income here because it's dramatically different, is obviously they haven't started taking from their IRAs yet in this retired hypothetical. So between Social Security and their pension, their income is just shy of $60,000. Now, one of the things that we certainly help people with in this case is how much of their IRA should we be taking if they need more income, or even if they don't need more income, maybe they're in a lower tax bracket now that we can kind of capture some of that low taxes. So I'm just going to do a range calculation here to kind of show you one of the things that we can go through with our clients. So this just shows you kind of what the taxable income is in their side of things. And the next, $10,000 to $15,000, they pay some taxes on their Social Security. But then for a long period of time, another $40,000 or so, it puts them into 12% federal tax bracket. So if they're going to take, say, $12,000, maybe they need $1,000 a month from their IRA to live on, it might be in their best interest to take even more, and either, if they need it for living expenses, they can use it for living expenses. But if they don't, maybe converting it to a Roth and really only kind of booking that 12% federal tax might be in their best interest, because down the road they might be in a higher tax bracket because the government raised their taxes, or maybe they have additional income from other sources. Maybe they receive an inheritance, or if they don't ever use it, that money can go to their kids and their kids don't have to pay taxes on the Roth. So that's an example of just, doing some efficiencies in tax planning. Now, It's obviously it's an option. They don't have to follow through on it if they say, I just want to pay my minimal taxes and life is good. Totally fine. But my job and our job is to really educate you on some different options that might help, again, lower your lifetime tax bill. And if we look at, the hypothetical working situation, again, fast forwarding, if they're not retiring and they're going to work another year, manipulating the maybe IRA contributions, how that deduction might impact their taxes, how much money they might save in that. If they want to do HSA contributions, we can put that in there, show them how that impacts their taxes, and you can see that IRA contribution saves them roughly $4,000 in tax with that $15,000 contribution. So again, helping educate to determine what makes the most sense for them. So those are just a couple of examples of what we can do with the tax planning. So if we reach out, if you've received a notice from us to get your 2023 taxes and you want to do some tax planning, please get those taxes to us. We can scan them in, or we can provide you a secure link for you to get them to us. And then we can do an evaluation and set up either a phone call or a Zoom to discuss, or if you have time, you can certainly come in the office and chat face to face. And I want to be very clear that we are not tax accountants or preparers. We are simply helping with the tax planning side of things, and we can, in coordination with your tax preparer or CPA, help make some decisions about your taxes. Thanks for watching. Have a great summer.